Welcome to Crypto Daily, where you'll find the latest news and analysis on all things crypto and NFT related. Hit the subscribe button and join our community of crypto enthusiasts. Let's navigate this exciting world of digital currencies together. Today, we're talking about Michael Saylor, the executive chair of business intelligence firm MicroStrategy, who is still facing a lawsuit for alleged tax evasion. Oh boy! It seems like some people just can't get enough money, even when they're already rich. So, here's what's been happening. The Office of the Attorney General for the District of Columbia is moving forward with its lawsuit against Saylor, claiming that he failed to pay personal income taxes, interest, and penalties due. This comes after MicroStrategy filed a motion in October 2022, which was denied by a D.C. court. According to a recent filing with the U.S. Securities and Exchange Commission, MicroStrategy said that the court had not dismissed the claim against Saylor for failing to pay taxes. However, the court did grant a motion dismissing allegations that Saylor, acting in concert with MicroStrategy, violated the District of Columbia's False Claims Act. Former D.C. Attorney General Karl Racine initiated the lawsuit against Saylor and MicroStrategy in August 2022. Alleging that Saylor had not paid any D.C. income taxes and that the company had conspired to assist him in tax evasion. Ouch! If that's true, it's definitely not a good look for MicroStrategy. At the time, authorities said that Saylor owed over $25 million in taxes for income earned while he was a D.C. resident. And if both he and MicroStrategy are found guilty, the penalties could add up to more than $100 million. Yikes, that's a whole lot of cash. The lawsuit claims that MicroStrategy had detailed information about Saylor's residency in D.C. but still chose to collaborate with him to facilitate his alleged tax evasion instead of reporting it to the authorities. Saylor stepped down as the CEO of MicroStrategy in August 2022, and the company's former president, Phong Le, succeeded him. So, what's going to happen next? Well, it looks like there will be a status conference on the lawsuit on March 10th. The filing from MicroStrategy says that the final outcome of this matter is not presently determinable. I guess we'll just have to wait and see what happens. In the meantime, it's definitely not a good idea to try and evade taxes, folks. The government always finds out, and you could end up facing some pretty serious consequences. Let's hope that justice is served in this case, and that everyone involved learns their lesson. Well, it looks like HSBC Holdings and Nationwide Building Society are the latest to join the growing list of banks in the country that are tightening restrictions on digital assets. According to a Bloomberg report on March 2nd, the banks have taken this step in response to warnings by UK regulators and scandals surrounding the crypto industry. Nationwide is reportedly setting daily limits of £5,000 $5,965 on debit card purchases of crypto assets, while credit cards will no longer be available for crypto transactions. Meanwhile, HSBC barred its customers from making crypto purchases with their credit cards last month, citing the possible risk to customers. But it's not just these two banks that are cracking down on crypto. Other banks in the UK like Santander, NatWest Group, and Lloyds Banking Group also have restrictions on crypto services, with most of them targeting the crypto exchange Binance. HSBC, for instance, banned credit card payments to Binance in August 2021, citing concerns about the exchange's regulatory status in the country. It seems like the authorities in the UK are really putting the pressure on crypto companies. The Financial Conduct Authority, FCA, proposed in February a set of rules that could subject executives of crypto firms to 2 years in prison if they don't meet certain conditions related to promotion. In a statement, the watchdog said that crypto-asset businesses marketing to UK consumers, including firms based overseas, must get ready for this regime. Additionally, the financial authority stated that all crypto exchange providers, including crypto ATM operators, must be registered and comply with money laundering regulations. The good news is that the UK's upcoming crypto regulation aims to establish the country's financial services sector at the forefront of crypto while avoiding strict control measures that have gained traction worldwide. The recently released consultation paper covers a wide range of topics, including algorithmic stablecoins, non-fungible tokens, and initial coin offerings. So it looks like there is still hope for the crypto community in the UK. The news of HSBC and Nationwide banning crypto purchases with credit cards may be disappointing for some, but it's not entirely unexpected given the current regulatory environment. However, with the upcoming crypto regulation proposals, there's still hope for the UK's financial services sector to embrace crypto while keeping it safe and secure for everyone. It seems that 2 US senators have written a letter to Mark Zuckerberg, urging him not to offer the company's metaverse platform, Horizon Worlds, to young adults. The senators are concerned about the potential harm that could come from allowing teenagers between 13 and 17 years old access to the virtual environment. They cited privacy concerns, eye strain, and online bullying as serious risks. The senators also highlighted the fact that Meta, the company formerly known as Facebook, has a documented track record of failure to protect children and teens. They mentioned reports of Instagram being behind many teenagers experiencing suicidal thoughts, as well as the firm's failure to stop ads for tobacco, alcohol, and eating disorder content targeted at young adults. The senator's letter raises an interesting point about the potential dangers of virtual reality environments like the metaverse. While these environments can be incredibly immersive and exciting, they also have the potential to be very harmful if not properly regulated and monitored. Of course, it's not just virtual reality environments that pose a risk to young people. Social media platforms like Instagram have been shown to have a negative impact on mental health, particularly among teenagers. The senator's letter is a reminder that we need to be thoughtful and cautious when introducing new technologies to young people. It's also worth noting that one of the senators, Edward Markey, has previously signed on to legislation targeting the environmental impact of crypto mining. This highlights the fact that there are many different concerns and issues associated with new technologies like cryptocurrency and virtual reality, and lawmakers are grappling with how to address them. Overall, the senator's letter is a reminder that as exciting as new technologies like the metaverse may be, we need to be careful about how we introduce them to young people. We need to take steps to protect their privacy and well-being, and ensure that they are not exposed to harmful content or activities. It will be interesting to see how Meta responds to the senator's concerns, and how this conversation evolves in the coming months and years. Have you heard the news about Coinbase and Silvergate Bank? Apparently, Coinbase has decided to terminate its partnership with the bank as its United States dollar banking partner. This is because of an ongoing investigation surrounding Silvergate Bank, which has reportedly caused the bank's stocks to drop by 40% in pre-market trading. But wait, what is Silvergate Bank? Well, it's popularly known as the crypto bank, for its slew of crypto partners. So, it's safe to say that this is a pretty big deal for the crypto community. Now, you might be wondering why Coinbase decided to terminate its partnership with Silvergate. According to Coinbase, it was a precautionary measure in light of recent developments. Basically, they don't want to get caught up in the investigation. This decision will not impact payment instructions in pounds or euros, though. So, if you're using Coinbase and paying in pounds or euros, you're good to go. It's worth noting that Silvergate Bank has been in hot water lately. The bank is currently facing an investigation from the U.S. Department of Justice over its involvement in the FTX collapse. The investigation revolves around former FTX CEO Sam Bankman-Fried's account with the bank. In another civil lawsuit, Silvergate Bank and its CEO Alan Lane were accused of aiding and abetting a multi-billion-dollar fraudulent scheme orchestrated by Sam Bankman-Fried, SBF, and two of his entities, FTX and Alameda Research. Yikes! It's no wonder that over 72% of Silvergate Capital stock was shorted by the end of January, according to the Financial Industry Regulatory Authority. That's a lot of people betting against the bank. In any case, Coinbase has other banking partners that it can rely on. The exchange will facilitate institutional client cash transactions for its prime customers with its other banking partner, Signature Bank. So, it's not like Coinbase is completely out of options. It will be interesting to see how this all plays out. For now, it's probably best to keep an eye on the situation and see what happens next. The crypto world is never dull, that's for sure. Crypto Daily, your source for the latest crypto and NFT news. See you in the next video.